Are you still using the same old tricks, strategies, and methods for using the RSI indicator? You might not realize how incredibly powerful this indicator is, but you're not using it to its full potential. I'm not here to share the same old complicated strategies with you. Instead, I'll show you a simple strategy. And remember, just because something is simple doesn't mean it won't work. You just need to add a little uniqueness, and you'll be among the 2 or 3 people out of 100 who easily make anywhere from $2,000 to $5,000 a day. So, let's jump into the video without any further delay. I'm going to show you the proper ways to use the RSI indicator for trading stocks, cryptocurrencies, and FX in this article because I see so many people using it incorrectly. There is a misperception that the RSI's overbought and oversold levels are only useful for identifying reversals. The market is deemed overbought if the RSI is above 70, at which point the price is likely to revert downward. The market is deemed oversold when the RSI falls below 30, and an upward market reversal is anticipated. This, however, is entirely false. Regardless of the general trend, it's only helpful if you utilize it as a precise exit point in trading techniques in conjunction with other indicators. It's very annoying to watch so many traders on YouTube truly explain it this way, and the likelihood is that you will not be able to identify actual market tops and bottoms by simply using the 70 and 30 lines. In actuality, the RSI can be used as follows. When the indicator is opened, it shows 2 points, the 70 and the 30, together with a single line. The market is regarded as overbought if the RSI is above the 70 point, and as oversold if it is below the 30 point. A frequent mistake that a lot of traders make is believing that the market would automatically turn upward when the RSI hits oversold territory and downward when the RSI gets overbought territory. Since it just doesn't function, this is actually a wonderful method to use the RSI indicator if you want to blow all of your money. You see, the overbought and oversold approach cannot be applied to every market scenario, which is the RSI indicator's shortcoming. When there is a strong trend in the market, the RSI will provide a lot of misleading signals. For instance, the price is obviously in an uptrend, and the RSI indicator is near overbought levels. If you were to take a sell position in this market in the hopes of seeing a reversal, let's see what happens. Rather, the price continues to rise, and the RSI once more reaches overbought levels. Therefore, the price may not necessarily turn down to an oversold level merely because it is overbought. For extended periods of time, prices can remain at overbought and oversold levels. A trend trading strategy is the dual RSI trading strategy. Large swings in the trend's direction are typically created when the price moves in that direction. An impulsive move plus a corrective move make up a single price swing. The conclusion of a corrective move is the best time for trend traders to enter the market. At this pricing, you can take advantage of the next rash decision. We will therefore look for ingress close to this location as well. In order to accomplish this, we must first determine the trend and then the entry. For each of these tasks, we shall make use of the RSI. First, we make 2 RSI plots on the graph. We modify the first RSI's period to 7 and its time frame to 1 day. This provides us with the RSI value on the daily chart. The overbought and oversold limits will now be 60 and 40, respectively. Make care to alter the RSI's color to something distinct from the other RSI once we've set everything up. I'll keep it orange for the duration of this video. The orange RSI will now assist us in determining the market trend over a longer period of time. The price is seen to be in an uptrend if the RSI is over 60, thus we will search for purchasing opportunities. Similarly, we will search for selling opportunities if the RSI is below 40, which indicates that the price is in a decline. The RSI that will assist us in locating the entrance spots is the second one. We will set the period to 7 and the overbought and oversold levels to 60 and 40, respectively, on the second RSI. Now that the chart is complete, let's talk about the strategy's guidelines. Since the dual RSI technique is a swing trading approach, our entries and exits will be based on the 1-hour chart. When we are prepared to trade, we must first determine the market's trend. We'll use this chart's orange RSI to help us do that. The price is regarded as being in an uptrend as the orange RSI is over 60. In an upswing such as this, we will search for possibilities to purchase. We'll now examine the second RSI and watch for it to drop below 40. 2 doji candles were visible, and the price oversold in this instance. Additionally, the the price is in close proximity to a support level. These are all indications that an upward price movement is most likely to occur. All that's left to do is watch for the RSI to return to above 40. The following candle was large and green, with an RSI more than 40. Although the candle was so large that we were unable to exchange it, technically, this was our entry. We wait because, as you can see, the stop loss is too broad if we enter here, which will put our stop loss below the most recent swing low. After a few candles, the price oversold once more and moved back into the support zone. This time, as the RSI rises above 40, the price forms an engulfing candlestick pattern. Since there are 5 stars in this setup, we will enter a buy trade when the candle closes. We aim for a 2-to-1 risk-reward ratio and maintain our stop loss below the swing low. As you can see, we were able to meet our trading objectives with the price. Let's now examine a sell trade. We may conclude that the price is in a decline because the orange RSI on this chart was clearly below 40. We will search for selling opportunities during a downturn. Here, there is a chance to sell as the price retreats and the RSI rises over 60. The price stalls and starts to decline. This minor reversal contributes to the confluence because it happens at a resistance level. When the RSI dips back below the 60 level on this candle, we enter the market. We aim for a 2-to-1 risk-reward ratio and maintain our stop loss above the swing high. As you can see, we also met our targets on this trade with the price. That is the most basic form of the strategy. Recall that just because a technique seems straightforward, it doesn't necessarily mean it won't be effective. As a trader, your objective is to take concepts and use your expertise to make them better. We have now reached the conclusion of this video. To ensure that you don't miss any of our next videos, kindly hit the like button and subscribe to our channel if you like the video. I'll see you shortly.